Hi, I'm Mike Capizzola, and welcome to IP Go, the show where we take a look at the IPO world, past, present, and future. On the face of it, U.S. equity markets were nothing to write home about over the last week, with major indices trading in a tight range on some days and barely moving at all on others. However, don't be fooled, because if we dig below the surface, we find that they were, in fact, a hive of activity, and that the opening 2 weeks of January have been among the busiest weeks ever in volume terms. The periods that have been busier, when measured by average daily volumes traded, were 3 weeks in March 2020 and 2 weeks during the global financial crisis in 2008. Still waters really do run deep. Against this background, it's perhaps no surprise that one of the issues that we highlighted last week went off with a bang. Buy now, pay later lender Affirm priced its IPO $5 above the top end of the expected range, launching at $49 a share. The stock opened at $90.90 when it began trading on the NASDAQ exchange on Wednesday and has gone on to trade as high as $119.45 since its debut. That sort of performance reignites the debate about how IPOs are priced. Advisors like to see a stock pop or trade well above the issue price. But when a new issue doubles in price, there is always the feeling that too much was left on the table. Backers and founding shareholders in a business such as Affirm will be very happy, unless that is, they sold stock in the issue at the IPO price. The highlight of next week's calendar is likely to be Roblox Corporation, which will trade under the ticker RBLX. Roblox creates immersive and shared 3D experiences, which are aimed at under 18s. Roblox has a community of millions and has largely grown by word of mouth. Roblox is not going to pursue a traditional IPO, however, and will instead opt for what is known as a direct listing. This means that there will be no roadshow or book building, and that the shares will simply be introduced to the market on day one and commence trading. In terms of numbers for the business, some 36 million users access Roblox daily. The business has generated revenues of around $727 million in the last 12 months and net income of $243.5 million. Once listed, there will be almost 197 million shares in issue. Roblox isn't raising any money in the listing, but it did raise $520 million from venture capital investors at $45 per share on January 6th. That funding round valued the company at $29.5 billion. This is something of a test case for the new issues market, as well as Roblox advisors Goldman Sachs and Morgan Stanley. It's one that the rest of the market will be watching with great interest. That's because direct listings with fundraisings have now been approved by regulators, and they could be a more cost-effective method for companies to list their shares compared to traditional IPOs. The Roblox listing is seen by many as a stepping stone towards that. That's all we have time for this week, but as usual, make sure to do your own due diligence before making any investment decisions. Stay safe, and we'll see you next week.